You could be losing thousands of dollars to the government without even knowing it. The hidden tax side of selling on eBay is a labyrinth of rules that traps many unwary sellers. For far too long, people believed their casual online sales were just harmless transactions. But the Internal Revenue Service has been watching, and now they have new tools to track every single penny. The biggest change shaking up the online selling world involves the dreaded Form 1099K. It used to be that you needed to hit $20,000 in gross sales and complete 200 separate transactions before eBay or PayPal would report your earnings to the IRS. That felt like a high bar for most casual sellers. Those days are gone forever. As of the 2023 tax year, the threshold for receiving a Form 1099K dropped dramatically to just $600. Not $20,000, just $600. This means if you sell an item for $700, even a single item like an antique clock or a rare collectible, you will likely receive a 1099K form. This reporting change was introduced by the Infrastructure Investment and Jobs Act of 2021 and has caused immense confusion and frustration among millions of online sellers. It is a massive shift. Now, every small transaction adds up quickly, and your sales history is under a much brighter spotlight. Many sellers mistakenly think they are just selling off old personal items that they bought for more than they are selling them for. This is often called a loss and usually means no tax is owed. But you still need to prove that loss with meticulous records. Without those records, the IRS might assume your entire sale price is profit. Imagine selling a vintage action figure for $800 that you bought for $500 years ago. Your profit is $300, but if you have no receipt for the original purchase price, the IRS could consider the full $800 as taxable income. This is why record keeping is not just important, it is absolutely essential. It is not just federal income tax either. State sales tax laws are a whole nother beast. Every state has different requirements, and many have what is called economic nexus rules. This means if you sell enough to customers in a particular state, you might be responsible for collecting and remitting sales tax to that state, even if you do not physically live there. Luckily for many eBay sellers, the platform itself acts as a marketplace facilitator. This means eBay usually collects and remits the sales tax on behalf of sellers for sales into most states. But you still need to understand how it works and verify it is happening correctly for your specific transactions, especially if you sell on other platforms or directly. There are typically 45 states, plus Washington, D.C., that charge statewide sales tax. Percentages vary wildly from 1% to 10%, or even higher in some areas, including local sales taxes. The distinction between a hobby and a business is critical for tax purposes. If your eBay selling is considered a hobby, you can only deduct expenses up to the amount of your income. You cannot claim a loss, but if you are operating a business, you can deduct all your ordinary and necessary business expenses, even if they create a loss that can offset other income. The IRS looks for a profit motive to determine if it is a business. This includes factors like how much time and effort you put into the activity, if you depend on the income, if you have proper business records, and if you have made a profit in at least 3 out of 5 consecutive years. If you consistently show a profit, the IRS usually presumes you are running a business. This classification impacts everything from which forms you file to what deductions you can claim. Deductions can significantly reduce your taxable income. Think of every single cost associated with your eBay sales. Cost of goods sold is a major one. This is what you paid for the item you are selling. Then there are eBay fees, listing fees, final value fees, advertising fees. PayPal fees or managed payments processing fees also count. Shipping costs are deductible, including postage labels and packaging materials like boxes, bubble wrap, and tape. If you use a dedicated home office space, you might be able to deduct a portion of your rent or mortgage, utilities, internet, and phone bills. Vehicle mileage driven for business purposes, like trips to the post office or sourcing items at thrift stores, is also deductible. Keep a detailed mileage log for this. Other expenses include business insurance, professional development courses, software for accounting or inventory management, and even legal or accounting fees you pay to tax professionals. Self-employment taxes are another significant consideration. If you are operating as a sole proprietor, which most eBay sellers are, you are responsible for paying Social Security and Medicare taxes yourself. This amounts to 15.3% of your net earnings from self-employment. This is on top of your regular income tax. It is a substantial percentage that can catch many new sellers by surprise. To avoid penalties, most self-employed individuals need to make estimated tax payments throughout the year. These are typically due quarterly, on April 15th, June 15th, September 15th, and January 15th of the following year. If you expect to owe at least $1,000 in taxes for the year you are generally required to pay estimated taxes, failing to pay enough throughout the year can result in underpayment penalties. Record keeping cannot be stressed enough. It is your ultimate defense against an IRS audit. Keep everything, receipts for purchases, invoices for sales, shipping labels, records of eBay, and payment processor fees, bank statements showing deposits and withdrawals related to your business. Keep digital copies backed up securely and physical copies if possible. Many sellers use simple spreadsheets to track income and expenses. Others invest in specialized accounting software like QuickBooks, Self-Employed, or other small business bookkeeping tools. The goal is to have an organized system that allows you to easily categorize all your transactions and calculate your profit or loss accurately. The IRS generally requires you to keep records for 3 years from the date you file your return, but 7 years is often recommended, especially if you have complex situations or potential disputes. Penalties for noncompliance can be severe. There is a penalty for failure to file a return, which can be 5% of the unpaid taxes for each month or part of a month that a return is late, up to a maximum of 25%. An accuracy-related penalty can be 20% of the underpayment of tax if you underreport income or claim improper deductions. There are also penalties for failure to pay estimated taxes and interest charges on unpaid balances. In extreme cases, knowingly avoiding taxes can lead to criminal charges, including heavy fines and even imprisonment. These are not minor slaps on the wrist. They are serious consequences that can devastate your finances and future. Many of the 22 million active sellers on eBay globally might be unknowingly exposed to these risks. And the platform facilitates over 135 million active buyers, creating countless transactions every second. Every single one of these transactions has a potential tax consequence for the seller. The internet has made starting an online business incredibly accessible to millions of individuals. But the tax system has struggled to keep pace with this digital revolution. Many regulations were designed for traditional brick-and-mortar businesses or large corporations. Adapting them to the gig economy and individual online sellers has created a complex landscape. Do not rely on misinformation found in online forums or from friends who know a guy. Tax laws are intricate and specific to your individual situation. What applies to one seller might not apply to another. For instance, if you are selling highly specialized items or have a significant volume of sales, your tax situation will be far more complex than someone selling a few used books. Consulting a qualified tax professional is always the smartest move. A certified public accountant or an enrolled agent can provide personalized advice, help you navigate the rules, and ensure you are compliant. They can also help you identify all eligible deductions, maximizing your legitimate tax savings. The money you spend on professional advice is often an excellent investment, saving you much more in potential penalties or missed deductions. The digital footprint of every online sale is permanent. eBay reports to the IRS and state tax authorities. Your bank accounts and payment processors report to the IRS. There is no hidden corner for online sales anymore. The government has access to vast amounts of data. It is up to you as the seller to understand your obligations and act accordingly. Ignoring these responsibilities will not make them disappear. It only increases the risk of future problems. Educate yourself, keep impeccable records, and be proactive in managing your tax liability. It is a fundamental part of operating any successful online selling venture. The days of flying under the radar are over for good.